Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's keep up with our euro currency analysis. Today guys we have taken, in general in the weekly report, today we have taken a look at the reasons of this recent rally that you could see on euro currency on Friday and Thursday. That was a bit surprising because we haven't got any solid statistics or some events that could trigger this action, and we find out that this is mostly technical. There's rumor stand on the market that big hedge funds was unwound some positions against the dollar. So that has happened because of the mixed recent statistics. So in summertime, as we said also in the weekly report previously, that major statistics such as inflation, employment could get some relief, some weakness because of the vacation time, and many people postponed the searching of the job later when the starting of the major job time after vacation time, after August, summer, and autumn. So that led to some mixed statistics, and overall performance in Fed minutes was not as impressive. So currently market have mostly consistent view with the Fed policy. They have the clarity, and they have no reason to expect some preliminary action in July or August from the Fed. At the same time, we see another driving factor that is stepping in currently on the market, especially on the Forex. This is activity of the rival central banks, particularly speaking Bank of Australia, Canada, and Bank of the New Zealand, especially Australia. So they have a really strong position to start tapering and reducing of the supportive measures to the economy even earlier than the Fed. That increased the attractiveness of the Aussie as an investment, because Bank of Australia even could start raising rates even earlier than the Fed. That makes the hedge funds to rebalance the portfolios and increase the part and the value of the alternative investments, for example, in Australia assets. And that leads to action that you see currently on euro currency. So what we could do in the current circumstances? The tricky moment here, guys, is in some kind of uncertainty, because we do not know how last this effect of the unwinning position will make impact on the market. Whether it will last for a week or 2 weeks, or maybe it will be very short term, and on Monday morning we will get some downside reversal. So this is the most important question currently. So how we could really rely on this factor, whether we able currently to take the long position on euro currency. Because it's really big temptation to consider taking the long position, because on the weekly chart of the euro currency, you could see it in the weekly report, we have big butterfly that's forming currently, and market stands in a very comfortable and very attractive moment to make the possession, because it provides very low risk of the taking part of this pattern. I mean risk of the potential loss. Risk that this pattern will not be formed stands high. The risk of the failure of this pattern stands high. But at the same time, in the money consideration, this risk stands not very significant. And how we could make the decision with this butterfly, whether we need to take position here or not, or if we decide to take position, what patterns we need to consider on longer time frames. So that's the questions that we have to answer currently. So first of all, since overall background stands a bit tricky, as it based mostly on some mechanical market processes, such as rebalancing of the portfolios and so on, with the Fed ahead that we have with the 2 weeks, we will get the Fed meeting again. And overall statistics, although it's getting some relief, but it's still, in general positive in the United States. We have to be careful with any bullish positions. And our solution is better to be conservative currently than aggressive. It means that without any significant pattern, it would be better to not take long position by far. This is first moment. Second moment, speaking about bearish position, we are not considering currently new short positions because market has broken for the 1850-1860 area that we mentioned before, and it means that the short-term bearish context has been erased. For a longer-term bearish context with this ABCD pattern is still valid, but it means that market could climb higher. And previously, if you remember, we said that it will be perfect to consider 120 area for position taken. And it might happen that indeed maybe around 120 we could get the chance for taking the position. That's why currently we are not considering any new short position until we will see signs of the failure of the current short-term bullish context. Speaking on the bullish context, on lower time frame we will consider some patterns that we take into our work on common week, on this week. But potentially, if indeed market will confirm its bullish ambitions, and indeed it starts to move in with the butterfly and start preparation, some background for reversal and higher upward action on the euro currency, here, for example, we could consider appearing on the hand and shoulders. So it could be left shoulder, head. If market will able to climb back to the 120, this will be not only the chance for taking the short position, but also it might be the neckline. We're starting to form the right arm of this pattern. Whether this pattern will work or will fail, we do not know. But this chance exists that for possessing with the weekly butterfly, we, for instance, could wait for forming of the hand and shoulders because it provides more clarity. It will be safer to take the position on the existing pattern because currently we don't have it. And approximately it will be the same level for the entry because the bottom of the right arm probably will be somewhere around the same level as we stand right now. So that's what we could say about medium-term perspective. In the shorter-term perspective, you can see that the wedge pattern has been discussed and been broken up, but this breakout, well, it means a lot, but at the same time, it's not sufficient context to tell that indeed market is forming something great to the upside. Because take a look, the bearish tendency is still valid. So you can see market is forming lower lows and lower highs. So market hasn't formed yet the bullish reversal swing. That's why we think that in the beginning of the week, we could consider this pattern. This might be formed here. Pay attention to these levels, 1916. This market hasn't reached it even yet. It's the nearest fib resistance. On the hourly chart, we have another fib level, 1901. So you can see this is an important level as well from this top to this bottom. So here we have the confidence resistance, 1915 area approximately. Our Friday setup has worked very nice. So you can see guard is cheaper to buy. Market was able to stay above 1815 area. That was our signal level, as we said. This market has to stay above it to keep the bullish context. Maybe somebody of you have taken the long position on this pattern. So in any way, upward action starts. And currently we're considering this ABC bottom pattern with the OP around 1909. That creates perfect combination in agreement with the resistance level. Once this level will be reached, we start to consider larger, also head and shoulders pattern with the potential entry somewhere around 1830, maybe 1850 area. So bottom of the right arm will be formed. If we will get this pattern, the market will be able to stay above the 1830, 1850 area. That will be at least some improvement of the bullish ambitions on the euro currency. Additionally, the failure of the market to stay above this area, this market fails to stay here and start dropping back or raising this upward action, should be a clear signal that we are going lower, and on the daily chart we should prepare for downward continuation. So as you can see, it's a lot of bets stands on the table around this level, and well, that's particular what we are watching for on the coming week on the euro currency. Speaking about current situation, so in this moment I do not see any reason to take the long position because market stands just a few pips below the strong resistance area. So you could manage only the positions that you already have. So maybe aiming on the target that might be reached here. As I said about the short positions on the daily chart, on the intraday charts, if you're a scalp trader, theoretically you could consider taking the short position right from this level with the target around 1850, but here you will have to drop your time frame more, maybe to the 5-minute chart, 15-minute chart, and watch for clear bearish patterns around this confidence resistance, 1950, once OP will be reached. So this is also tactics that you could use if you trade on the very low time frames. So that's, guys, our position on euro currency and patterns that we intend to consider in the coming week.